Welcome to Market Insight for the week of June 10th through the 14th. We'll start, as we always do, with the monthly chart and our top-down approach. The monthly continues to hold all-time highs up in here, and it also continues to be overbought in the trend channel. This is the demand line and the supply line, and it's overshot the supply line here. Now, there's nothing to say that it can't continue to go higher. It certainly can, but we're also vulnerable to a pullback in this area. And we've been discussing this for a few weeks now. When the monthly does decide to pull back, it's going to be sharp and probably sudden and dramatic on the daily, and it's likely to last multiple days, if not a couple, 3 weeks, right? But even when the market does pull back, and it looks dramatic on the daily, it can come all the way back, well, can come all the way back down to the April lows here at 49.63, or another good target here is 4,800, 4,808, the high that was put in late 2021, early 2022. We could even come all the way back down here to 40.35 area, 40.34 area. Old resistance, now support, and its confluence with the demand line on the monthly trend channel, or even all the way back down to the halfway point here, breaking the demand line a little bit. Still be bullish coming all the way back down in here, right? So useful to keep that in mind if and when, or when and if the monthly does start to pull back. The clamor is going to be over in a bear market and so on and so forth. So just let's keep our heads about us and keep with the charts rather than all the noise and on Twitter and social media and what have you. So let's take a look at the weekly and see what's going on here. Very interesting chart. After 3 weeks of, notice this level here that was put in in March here, 53.33, right? 3 weeks ago, then 2 weeks ago, last week, we tried to come up over the top of it, tried for 3 weeks and couldn't do it, closing underneath each time. We poke up and can't do it, poke up, can't do it, can't even poke up and can't do it. And now for the first time this week, we've been able to close up above 53.33. So that's a positive, that's constructive. So 3 weeks ago, buyers almost closed it up above the 53 swing high, 53.33 swing high, but couldn't do it, all right? And that opened the door, of course, for sellers to come in. And sellers did come in, right? They pushed the market down. They prevented price from going higher. We tried that second week to go up even higher, 53.70 area, I think. And couldn't do it, right? And then instead, we pushed down. But notice this week, rather than continuing to go down, we hold what? A higher low, a higher high, and a higher close. In fact, we didn't even come all the way back down to the lows of last week before pushing back up above 53.33. So sellers had the opportunity, but they were anemic, especially these last couple of weeks. They just didn't show much of a pullback. And with the deepest pullback that they had on the week prior to last week, it immediately bobs back up. And now this week, we're closing firm above resistance. So buyers were not very strong on these couple of weeks. Now, for the first time, we're back up above 53.33. And they're going to need to keep pushing up, right? We want to see the buyers continue to push up now that they're in a position to bring the market up. Just like sellers were in a position to bring the market down, they couldn't do it, so buyers step in. We want to see, now buyers are in that position. We want to see them push up because a close back underneath 53.33 could signal that the weekly is actually weaker than what we see here and is headed for more trading range action. And if that were to occur, we would see price first come down to the lows here at 52.05, break that, and then head back down towards 49.63. So we're going to be watching the weekly pretty carefully here this coming week. Let's turn to the daily. Now, the daily chart's also bullish. We did see some selling come in on Friday, right? The Friday jobs report came in, and not surprisingly, volatility increased. Now, this coming week, we have both CPI, the Consumer Price Index, and FOMC, the Federal Open Market Committee meeting, both on the same day. So we ought to see some good volatility this week, right? Now, that day, by the way, is Wednesday, June 12th. CPI, Consumer Price Index, is at 8:30 a.m. Eastern Time. And then that's pre-market, pre-US market. And then the FOMC, the Federal Open Market Committee, has their meeting, their quarterly meeting. I think it starts on Monday or Tuesday, and it finishes up on Wednesday, and that they make the announcement, right, about what they're going to do with interest rates, what they did in that meeting. And they do that at 2:00 p.m. Eastern Time, also on Wednesday. So Wednesday the 12th ought to be quite volatile. Let's go back to Friday here. So we did see volatility pick up on Friday. We see some increase in volume and a close in the middle after, a wider spread. So, but despite closing in the middle, there are a few things that make this more positive than negative. The first thing is that we're holding above the 53.49 level. Note that we were negotiating this back earlier in May, but couldn't close above it. And we couldn't do that until Wednesday of this week. And then Thursday we hold above it, and Friday we also hold above it. So that's constructive. The last three days of the week, this past week, we've been able to hold above this 53.49 level that we were unable to hold above earlier in the month. So that's constructive. It's also constructive to see that Thursday we had a narrow range day, right? And low volume, and it was a down day. So, what happened to the buyers there? Did the buyers stop? Is this no demand in here? And so the next day we get a little bit of supply come in, but the positive is that it didn't go deeper, and we didn't close all that poorly, right? We get a little no demand in here, and that opened the door for sellers to come in, but it got bought. The selling got bought down here. So when we hit 53.33, which is the other important level that we're dealing with in this area. So supply did come into the market now a couple of weeks ago on May 23rd. Let's take a look at that, because it's useful to see this here. So now notice we had supply that we're in the same area, right, as we were back on the 23rd, and we see supply come in, we see volume pick up. And notice how the market continued lower after that, and then rallied back up to the top of that selling area where we are now. Now let's contrast this with a similar bar that we saw back on April 4th. It's a similar outside down day as we see on May 23rd. We get the pickup in volume just like we do here. Now notice what happens after April 4th. Both show supply, and in April the market was weak and responded by going down lower and lower and lower, right? Compared to today, we didn't go nearly as low, right, in terms of points, nor did we go nearly as long in terms of time, days going down. It was just a few days down here. And then we quickly rally back up. We spent a few days here underneath, but popped right through that, and we're holding up in here. Note that what happened, we go down and down, we go way down below here, below the supply line. And then we come back up to old support, new resistance, and we couldn't get back up over the top of it before coming back down first. Here we didn't have to come down. It's more bullish here. So overall, we're more bullish currently, right, than we were back in here. And that would be my lean, is that we'll resolve this most likely to the upside. But again, don't forget that that monthly chart, and we're now, we've got FOMC and CPI. So the news could be a catalyst here. The market often uses news for catalysts. So we want to just be careful and cautious on both sides. So let's take a look at the coming week. Let's shift over to the 240-minute chart here for a moment. Now, we may see the market fill out this trading range here in this area between the all-time high here of 53.85, that's this up here, and this low down here, which is the, I didn't mark it on this chart, there it is, the 53.45, maybe down to 53.40. So early in the week, watch for flushes down underneath, 53.40, 53.45 area, and then recovering back up above 53.45, and for a trade back up towards the top of the trend channel. So that's what I'm kind of thinking about in here. Now, a target for a breakout here. Let's go back up to the daily chart. A target for a breakout to the upside would be up in here, and that's around 54.15, and that's the reverse use of trend line in here as the target. One of the areas of resistance. Now, if we start trading below, let's go back to the 240-minute chart here. If we start trading below 53.40 down here, right? We may see further downside. We may take out Friday's low, which is 53.29 here, and set a reaction off, maybe down all the way down here to 52.05. That's this level here, right? So let me give you a little bit of heads up. We'll go back to the daily here for a minute. The key is going to be right in here around 53.02. Now let's go back to the daily to see why that is the case. Yeah. So remember I said that we held in here this resistance and then pushed up. Well, that was around 53. So this is the vertical acceleration up here. If we break this level, then we could come back down to 52, and maybe we're filling out a larger trading range. The other possibility is that we stop in here around 52.65, give or take, along the demand line of the daily demand line. So that's what I'd be kind of thinking about this week. We early in the week flushes down to 53.40 area, and then pushes back up. The FOMC and CPI day throws a big wild card into the middle of this. Hard to kind of see what's likely there, but we know where the supports and resistances are, and a break of this 53.02 level will bring us this 53.02 here, a very important level that we traded around. We break that, the odds favor back down to 52.02, and maybe even more than that. Let's take a quick look at the major markets here. Now notice that the Dow is the weakest. The S&Ps and the NASDAQ are both holding around their all-time highs. The all-time highs were made over here back in early April on the Dow, and you can see we're not even close. So the Dow is clearly the weakest, and so watch the Dow this week, especially after Wednesday. And the key question is going to be, does the Dow stabilize after we see the expected volatility with FOMC and CPI? And or does it not stabilize and then indicate that we're heading down? So the Dow may give us a heads up to the longer term pullback we've been anticipating there on the monthly, whether it's going to happen or not. off of the FOMC. We'll see. So for the coming week, Helen is starting meditation classes on Tuesday, June 11th, and that'll be at 7:00 p.m. Eastern time. And she's excited to start doing this, and we're excited to do this. This will be good to do. Maybe I misspelled Tuesday. I'm not sure. Anyway, we'll do it. We're starting on Tuesday, and then of course we have deep practice on Thursday, our normal time. So enjoy the rest of the weekend. Have a great trading week next week, and we'll see you Tuesday for meditation and Thursday for deep practice. Everyone, take care. Bye-bye now.